Hello, and thank you for stopping by. Another uh, deeper and more technical, but something that we've been able to break it down and make it more simple for you. Um, After doing so many and lives and such, my voice is starting to get a little rough. So, with that being said, my name is Faisal, and I am here to help you understand the Silicon Valley bank collapse problem. Not just Silicon Valley, because there's Sterling as well, and there's a third one in the talk so far. So I'm going to break it down, keep it simple, and show you what the problems have been and where this could lead. So with that being said, credit repair now. I'm a credit repair specialist, uh, and we operate all across Canada. Um, some of the best practices for live listening. A quiet place is great. Headphones are a great idea. Putting your phone on silent is another best way to stay present. Multitasking is will not help. Checking emails and such, you usually miss out on information. And kindly stay present. Sitting down really helps. I'll actually switch this over here because that might just be best. Perfect. I think at least. Yeah, I can just switch it right there. Thank you, folks. So, the topic is a bank collapse, which happened. It all started on Wednesday, but Friday is when it surfaced. And over the weekend, Biden administration has made some major changes, including the rule breaking of insurance part of the deposits. In any case, we'll get more into it. This presentation will take 15 to 20 minutes, depending on how long I keep talking. Ask questions in the comment section. I will answer them at the end of the presentation. And at the end of webinar, you will learn more about economy in four different developed countries and such. So, with that being said, credit repair, the phone number to call is 647-373-9651. Hey, Dave. My friend is logged in, and yeah. Credit repair now, 647-373-9651. Facebook, Instagram, TikTok, website, email, anything and everything. We have it all. If you call, it comes right on my phone, and I will answer as soon as I can. Bank collapse 2023. Silicon Valley, it's a commercial bank, by the way, headquarters in Santa Clara, operations inside and outside USA, Canada, China, Denmark, Germany, Ireland, Israel, Sweden, and United Kingdom, of course. So Canada's banking regulator, by the way, has temporarily seized all assets of Silicon Valley Bank's Canadian branch after the institution collapsed. And it's right from the global news. Silicon Valley collapsed in an outstanding speed on March 10, and there's a huge reason for it, which I will get into it. It is said to be the second largest bank fail since the Washinton Mutual Bank in 2008. But why the sudden collapse? SVB, Silicon Valley Bank collapse came suddenly following a frantic 48 hours during which customers yanked deposits from the lender in a classic run on the bank. What does a run on the bank means? If you have $10,000 in your checking account and you go stand in the line and ask for the entire $10,000, That's the run on the bank. Starting to take money out of the bank in cash. But the roots of its demise go back several years. What I mean by that is a few years ago, there was an influx of deposits in this bank, and that sort of caused an issue. But like many other banks, SVB, what they did is they took those deposits and plowed it into US government bonds, treasury, during the era of near zero interest rate. Of course, the purpose of that was to have the security in place, but that has a second side of its consequence, and that's what got them in trouble. The past year, the interest rates are continuously rising. We all know that it's to fight the inflation. US has increased rates 7 times, 7 different times. 6 last year, 1 this year. When the rates increase, the bond prices started to fall. Of course, a bond is a fixed income debt security, and it's similar to an IOU. Borrowers that issue bonds to raise money from investors willing to lend them money for a certain amount of time. Now, U.S. government had bonds that Silicon Valley Bank bought into and locked their funds in for a certain amount of time. Now, what sparked is when there is a bond, and if there is an increase in interest rate, the bond loses its value. Not all of it, but some of it. So every increase in interest rate takes a little bit of value away. Basically, the fair market value of that bond is reduced. And when that happens 6, 7 times and you go to cash it, now you've got a big loss, which is where trouble started for Silicon Valley Bank. That's when depositors rush to withdraw all their funds all at once. That's the bank run, and fears that the bank may fail as more customers withdraw their money. It increases the likelihood that the bank will default and run out of cash. Now, while SVB's problems can be traced back to its earlier investment, the run on the bank was triggered Wednesday when the lender announced that they have sold a bunch of securities, which is bonds, at a loss, and they had to because rates went up. The fair market value of the bond dropped, and would sell 2.25 billion in new shares to plug the hole. Okay, so after selling the securities, there was a $2.25 billion loss that had to be plugged by some sort of financial instrument, and they took the decision of going towards shares. Now, with that announcement, Silicon Valley Bank's stock dropped 60% and dragged. And because of that, the other bank stocks also dropped drastically. And as investors began to fear a repeat of global financial crisis and a decade and a half ago. So by Friday morning, trading in SVB shares was halted, and it had abandoned efforts to raise. It could not continue the efforts to raise the capital or find a buyer. They had a bigger trouble. Now, the Federal Reserve interest rate raised 7 times last year, 2022, making it 4.5 at the end of the year, and another 25% hike this year, which brought the policy rate to 4.75. However, the Fed still continues to buy billions of dollars of bond to stimulate the economy, all despite 40-year highs in various measures of US inflations. So the New York-based Signature Bank failed over. So this is the second bank I was talking about, failed March 12th, which was Sunday, which made it third largest bank fail. The bank's connections with cryptocurrency seem to have spooked depositors after Silicon Valley Bank's collapse. In the event of bank failure, the Federal Deposit (FDIC) steps in usually to offer insurance coverage up to a certain limit per depositor per bank for each account ownership category. Signature was taken over by New York Department of Banking Services on Sunday. Imagine they were working on Sunday to get this resolved. The FDIC, Reserve and Treasury Department, said all depositors at Signature as well as Silicon Valley Bank would be protected. Now that's a major policy change, basically breaking the rule. Okay, now of course it came from Biden administration, but that's a major policy change, major breaking of the rule. And that is not concerning right now, but it will be concerning. With that being said, that's what I have so far. I will be building more content around this, and I will have that posted, and so on and so forth. In the meantime, if you have any questions, concerns, feel free to call us 647-373-9651. Facebook, Instagram, TikTok, website, email, everything is there. If you have any questions, feel free to reach out. Thank you for being here.